Portfolio Builder members, we had a great trading period. We're up 74 cents a share after buying back our covered call and selling our put option. And so we were able to have downside protection, not need to use it, and still walk away with a great profit. So we're doing a very similar setup today. Just so you can see, our portfolio had a profit of $42,182 on Wednesday, after we'd covered all our positions and before we'd written a new covered call. And today, before writing the new covered call, we're at $43,423. So we went up a whopping 7.78% total return to 7.99%. So if that's exciting to you, you found the right program. We rarely lose, and we just inch up our profits 3 times a week with this very repetitive and boring strategy. Now, right now, I'm highly suspicious of volatility in June and July. And so that's why we are taking a good chunk of our profits and putting it into long put options, which normally I would say is the equivalent of throwing money down the toilet. But right now, we have a very clear threat ahead of us, so it makes sense to play it a little safer. So the first step is to own at least 100 shares of the SPY. If you don't have that, you can't follow the rest of the trade alert. The next step is, if you did take our trade from Wednesday, to buy to close your June 14, 2019, 288 call option. Now, it doesn't matter what credit you get, it will be fair relative to the current trading price of the SPY. Okay, so this is very, very liquid market. There's a 4-cent spread, so you'll get a very good price, and you don't have to worry about that. Now remember, if the market goes up, there's a good chance we buy back our covered call for a loss. And in this case, I actually have a profit on it. But we also have to buy back our put option for a loss. So you got to wonder, how do you make money? Well, it's because the SPY goes up. If the SPY goes up, then our underlying asset delivered the profit. So we made a little profit on the covered call. Our underlying asset went up in value. So this is how you close out that position. The next step is to sell to open the June 17th, so that's this Monday, 289 call option for a nice, juicy 94-cent credit. Now, if the market goes higher, we're getting fair value on our shares. It's trading last price as of writing this, $289.05, and we're agreeing to sell them for $289 plus the credit. So if they want to exercise the right on this option contract, they need the S&P 500 SPY ETF to climb well over 290 for them to start making some good money, which is fine. If they do that, great. If not, if the market doesn't go higher, it just goes flat, well, we get to keep all their money and our shares. So it's a good setup for us. The next step is to sell our put option. That one cost around 40 cents. We're selling it for 7 cents, so that's a loss, but that's our insurance policy. And that's actually going to be what I believe will help us get some extra profits in the next 6 weeks that are a little higher than we're used to. So it could be a very good setup of weeks coming up if my prediction is correct. Now, obviously, we're not losing if the market goes flat or higher. We're enjoying very high premiums right now. Next step is to buy to open the June 19, 2019, 284 put option. So that costs 41 cents. So the idea is we're taking some free money out of the option market. We don't lose if the market goes up or flat, but if it goes down, we can actually generate extra profits from this put option. Now, you're probably wondering, where is the weakness in the trade? I'm going to tell you, it's going to be somewhere between, there's a lot of factors. There's volatility, there's time premium, there's intrinsic value, out of the money, in the money. If I try to teach you all that in this video, it would make your head spin. But the bottom line is there's going to be a weak area that's between the 289 covered call minus the credits. We've got about $1 of protection right away on that SPY. And then right below that, we're going to have a little weak period until we get close to this 284 put option. Excuse me, this 284 put option. Same strike, but we now have a little extra time. So between that range is where we're going to show a little weakness, but pretty quickly as we get closer and closer to that 284 price, all of a sudden that put option exponentially grows in value. And so, of course, if we do see the SPY starting to pull back, I'll issue an emergency alert at the end of the day before the market closes saying, hey, let's take some profits on that covered call. Let's think about it. If SPY goes lower, this covered call will quickly lose value today, and we can just buy it back and write a new one. So we can actually get 2 paydays Friday, this trading day, if the market does pull back a little bit. Now, of course, we don't want to do that, and we don't really need to because we do have this downside protection. But yeah, that's where we're a little weak. Now, think about it. What about everyone else? Everyone else is just long stocks. They have nothing underneath them. So we're set up to make extra profits if the market gets turbulent. Most people are just holding higher risk stocks that are lower quality than the SPY, and they're just going to get hit over the head and lose a lot of money. So this setup doesn't lose if we go up or flat. It has a little weakness between 284 and 288, but of course we're going to react to any sudden down moves and just buy back that covered call and write a new one that's a little bit lower. So we can react, and it makes it very, very difficult for us to lose money. So if you like this strategy, this is the way you do it. This is how you protect your assets and generate profits in multiple outcomes in the stock market. So what am I so fearful about? Why am I buying put options with half our profit? Well, I think that Trump's going to raise the tariffs and China's going to retaliate. And so I think that's going to cause various corporations to start lowering their expectations on profits, and I think that's going to scare people out of the stock market very short term. And this is even with the Fed now slowly starting to lower rates. So I think there'll be a big boom in stocks, but I think first we have to have a stock crash. We need this escalation between US and China to heat up, to cause pain on both sides, to make everyone meet somewhere in the middle before a resolution can occur. And what's beautiful about this is as that's happening, the Fed will lower the rates, it'll be free money out there, and this could create a huge stock boom in the future. But if I'm wrong, the two parties make a deal right away, we're not going to lose. That's what's really important about this setup. We have a free way to bet down and protect our assets and make money in flat or up territory. So show me a strategy that can do that better than this. I don't think you can. Now, if you do like what you're seeing in the basic program, that trades Monday, Wednesday, Friday. We have a webinar for freebies Thursday and for paid members only on Wednesday. So if you do want to upgrade, that's one big benefit. The other big benefit is you're going to get a 30-day free trial into our more advanced programs. So the SPY is great. It's the most liquid asset in the world. But wait till you see the profits you can pull on Warren Buffett's #1 position, Apple. Also, it's the #2 spot in the SPY and the #1 spot in the QQQ. So there's a ton of money flowing into Apple. I forget how much cash they have on the sideline. I think it's almost $1 trillion or something absurd. So yeah, they've got a lot of money to buy back their own stock and protect it. And so that's why I like Apple. On Tuesdays, we're exclusively trading Apple in our Diamond Club. And you'll be surprised that you can sell an in-the-money covered call instead of an at-the-money covered call, get a way higher yield, and buy a much more lucrative put option to play the same setup I just taught you in the basic program, but for something like 4 times the profit. So that's what we're doing in the Diamond Club Tuesdays. And you'll get a free 30-day trial to that when you do upgrade from a free program to the basic. Now, on Thursday, if you have enough cash, you might be interested in this program. Same strategy, Amazon, Google. Okay, you're going to need 100 shares of at least one of those companies. So the buy-in starts at a minimum of about $108,000 if you only traded Google with this strategy. And for Amazon, of course, $186,000 to play with that stock. Now it puts you in a whole different investor class, and now you're playing with options that not many people can have the pleasure of writing. So it does set you out of the crowd and gives you some serious advantages. That's called our Whale Club. It's not about saving whales, it just means you have a large portfolio. So that's why we've named that one. And it trades on Thursdays. So you'll get to see all 3 programs delivered Monday, Tuesday, Wednesday, Thursday, Friday, predictably right at noon Eastern. Now, a fair warning, we launched our product to investors with very short track record. Didn't know if people would enjoy the content. All I knew is this is the method that most people going into retirement should be following, and that they're doing things that are very reckless with their portfolios. So we launched it. Turns out people love it. We have a quickly growing audience. We're really enjoying putting this on, but we are raising the price on our basic platform to a more typical price of $2,000 a year. So if you call Dean, this is your last chance to save $1,100 a year on the basic program. So you can get in for $897 if you call Dean right now. It's only available over the phone, 505-322-7515. You'll get locked in at that low rate for the rest of your life, and you'll get to try out the Diamond program on Tuesdays and the Whale Club on Thursdays free for the next 30 days as an additional bonus. And instead of being grouped in with all the freebies on Thursday for the Q&A webinar, you'll get to join us in the little bit seriouser group of people who've actually paid and joined our membership program. So thanks again. Have a great weekend. If anything scary happens on the SPY, we will buy back that covered call, take the profit, and write a new one at a little bit lower strike. So we have plenty of security over the weekend. And don't forget, we've got that put option, which really protects us from any kind of real serious risk and can help us generate extra profits in the next 6 weeks. So thanks again. And if there's no emergency alert, there will be a second video update after the market close. We'll take a look at all the charts and just review our different portfolios and positions.